What's up everybody, Nate here, and I'm not even gonna sugarcoat it for you today. Millennials are 100% financially screwed.
We're screwed.
Roughly 32% of Americans in general are struggling to pay their bills right now, and over 70% of Americans are having to find a second job in order to combat inflation, but that's not all. Every single month, more and more Americans are reporting having to live paycheck to paycheck. And if millennials alone didn't look bad enough to the previous generations, nearly 22% of them report that they are willing to go into debt in order to date the right person. Now, obviously, millennials and Gen Z have had a really difficult time growing up, at least financially, and 3 economic downturns and a mountain of student loan debt will do that to you. But that's not the only thing that's going on here, and it's not the biggest factors that are contributing to millennials being financially screwed in the future. Household debt, which includes millennials, is growing at a faster rate than pretty much any other time in American history right now. The jobs market is closing, and around 50% of millennials have reported actually closing retirement accounts due to inflation. So today I kind of want to break all of this down and show you how millennials are financially screwed right now, how that is going to affect them in the future, and how millennials and Gen Z can unscrew themselves in 2022 and beyond. Now, to be completely honest with you, this is just kind of a crazy headline that I found for dramatic effect, but that headline actually got me thinking about millennials and their spending habits in 2022. If you are a millennial or someone in Gen Z, well, then it's really difficult for you to not go in debt in order to buy just about everything right now. And that is mainly due to inflation. Over the last year or so, we have seen consumer prices go up by around 8.2% on average. And we know this because of the Consumer Price Index. That essentially takes a basket of all goods and services in our economy and shows us how prices are fluctuating month over month. And right now, they are going way up. Now, this is affecting millennials in a lot of different ways, because with them having to spend a lot more money on some trivial things right now, like basic needs at the grocery store or basic services, that means that they're not able to invest in their future as much, or they're not able to put as much into savings either. Now, right off the bat, that is keeping millennials down financially, because if they were to have a major emergency, then they're not going to have any money in savings because they have to spend so much on all of their basic needs. Not only that, but household debt in general, including for the millennial generation, is skyrocketing right now to new record highs. We're talking credit card debt, and we're talking some other really big debt like an auto loan or a mortgage. What we have seen over the last 2 years is millennials especially getting into new houses, becoming homeowners for the first time because interest rates were really low and economic stimulus really helped to push them into a brand new house. And that is great because that allows these millennials and members of Gen Z to have something of their own, like a home. And a home now is something that they're able to hold on to for basically as long as they're financially able to. But this problem is kind of twofold, and when it comes to the housing market in particular, millennials are pretty screwed right now. The first and foremost has to do with millennials and the costs of owning a home. Now, many millennials bought a house in 2020 and in 2021, but the costs associated with a home is much higher than many millennials were actually ready to take on. So when you get a house, you've obviously got all of the regular maintenance to it, like yard work, and if something breaks, like your dishwasher, then you're gonna have to pony up the money in order to get that. But then you also have some other costs associated with your mortgage. These would be insurance and tax costs. Now, over the last couple of years, these costs have been going way up, considering housing values have also started to rise. The more valuable your home is, the more you're going to pay in taxes and in insurance. But many millennials, even though they got in at a really low purchase price and their interest rate was really low, they now can't afford their house, considering the other costs in our society are going up, like food costs and energy costs and, well, pretty much everything. And the other side is for millennials that have not bought a home at this point in time. Now, obviously in 2020 and in 2021, interest rates were really low and housing prices for the most part were pretty low, but now prices for homes are really high, and so are interest rates because the Federal Reserve has been raising its interest rates. That means it's getting a whole lot more expensive for millennials to buy a home, and the fact of the matter is, if you don't own a home right now, well, it's gonna be really difficult for you to get one in the future. Not saying impossible, but these home prices are only going up. Now, obviously, millennials have an opportunity that they are relatively young and in their best working years, so there's a good chance that they might be able to recoup some of those costs, make more money, save more once this economic downturn is over, and go and get a new house. But the problem is the jobs market is also starting to rapidly change, and that is the second thing that I want to discuss. Over the last 2 years, we have seen the jobs market explode, all for the employee. Workers basically got the upper hand on every single business, telling them the terms of their signing. They wanted a raise, they wanted better work-life balance, they wanted better benefits, and they got all of these things because businesses need them in order to survive. These companies have to have people in order to run their business. So with literally millions upon millions of Gen X and Gen Z and millennials quitting their jobs in 2021, now the power was with them. And because there were so many jobs available, millennials knew that they could job hop, they could go anywhere that they wanted to. But now the script has basically been flipped again for the companies and the businesses. Now the employer once again has all of the power in the relationship because we have a tightening workforce. What this means is there's a lot fewer job postings in the United States, and that number continues to decrease every single month because businesses don't have the same capital and liquidity as they did before. Now they're not able to hire as many people because they just don't have as much money, which means that millennials and Gen Z, well, if they're employed right now and they're making good money, then that is fine. But if they want to job hop, then they're gonna have a really hard time doing so because, well, there's just not as many jobs available. But this problem is much deeper though, and it has to do with our macro economy and the Federal Reserve. I mentioned it before, but the Federal Reserve is raising its benchmark interest rates. Now, the point of them doing that is to eliminate a lot of demand in our economy because now it's going to be harder for banks to get their money, which means they're going to make it a lot harder for consumers to borrow the bank's money. So interest rates are going up for everything, like a business loan. Investors have their interest rates going up for debt, and it's a lot harder to get a mortgage or an auto loan. Once again, this is all related to the interest rates, and the whole goal is to bring down inflation because now there's not as much money circulating throughout our economy. Nobody can really spend any money. So that is the Fed's goal here. But the Federal Reserve isn't really going to have a direct impact on prices in the way that they want to because the Fed raising interest rates is not going to tell a business to lower its prices for, say, its food products. What it's going to do is tell the business that now they don't have as much investor interest and they don't have as much access to easy debt. So now they can't grow as fast, which also lowers inflation, but it also means that these businesses are probably going to have to cut people in order to stay profitable. So what I'm getting at here is this: because the Federal Reserve is raising its interest rates, that means these businesses are probably going to not have as much money, cutting their workforce, increasing unemployment, and that's going to hurt millennials because now we're about to see a lot of millennials unemployed, and we're about to see a lot of these jobs disappear forever. Millennials right now are in their best working years. We're talking mid-20s to mid-40s, and we don't really know how long this economic downturn is going to last for, but because millennials could be out of work now for several years because of a massive recession around the corner, now they're losing out on their best money-making years, which means they're not going to be able to pump that money back into the economy, and they're not going to be able to grow as much wealth as the previous generations. So far we've got debt holding back millennials a lot, inflation holding back millennials, and interest rates also starting to hold back millennials because they can't borrow any new money, and we're probably going to lose a lot of jobs because of the Federal Reserve and their fight to bring down inflation. Now, the third and final thing that I want to go over today has to do with investing. Millennials right now are starting to close their investing accounts and selling off all of their assets because they're living paycheck to paycheck. This is one of their ways to battle inflation. They have all of this money invested from the years that they finally got out of college and they finally got a good enough job to be able to put money way, whether it was in just a regular investment account or a retirement account. But now, because everything costs so much and because of this economic downturn around the corner, they are deciding to sell their assets so that way they have money for today. I mean, I honestly can't blame them in this situation because, well, you gotta eat, right? I mean, you gotta be able to feed yourself today. You gotta be able to take care of your family today, and that's going to take precedent over what you could have tomorrow. So I totally understand why millennials would want to do this, especially since, like I said before, we are now at the age where we're starting to have a really solid career and we're starting to have a family. But once again, this is kind of keeping down millennials from their wealth building journey in the future. I mean, when we talk about investing, time is of the essence. And when we talk about building wealth through real estate or commodities or bonds or stocks or whatever it may be, we talk about a phenomenon known as compound interest. Millennials are losing a huge chunk of money by starting investing late. Like, let me hit you with a crazy fact. Let's say at 18, you threw about $1,000 into the stock market. Now, for 40 years, every single month, you invest $100 at an average interest rate of 7%, which is a pretty good interest rate. At the end of those 40 years, you would have around $250,000. And if you get an interest rate that actually beats 7%, let's say 10%, you would have over $500,000. Literally, that's just from throwing $1,000 in at 18 and then throwing $100 a month in after that. So let's say you invested now for just 30 years. You took $1,000 and put it into the stock market and invested $100 after that for 30 years at a 7% interest rate. Now you're only going to have $120,000. And even if you get that above 7%, let's say 10% again, you're only going to have $220,000. Remember, around $250K was the average return if you started investing at 18. So just investing early alone could mean the difference of $250,000 plus. And the fact of the matter is, millennials, even though they could be behind right now or they're going to have to start over in a variety of different ways, they can still achieve the wealth they want. But the problem is, and why they're financially screwed, is now they're going to have to contribute a whole lot more to their investing accounts in order to get there. They're going to have to invest $200 to $300 more every single month to do what somebody can do at 18 years old with a whole lot less money, simply because of time. And that is ultimately our biggest asset. Time. And millennials are losing it right now because of all of these economic downturns. And that's obviously not their fault, right? Like, millennials did not choose to live in this generation, and they didn't cause a lot of the economic collapses that we have all been through at this point. But what's important now is that millennials kind of take all of this information and realize that there is a way to unscrew yourself in 2022. So the first and foremost thing that you need to keep in mind is that economic downturns happen. They are all part of a cycle. We have booms and busts in our economy, we have booms and busts in our markets, and they're going to come and go over time. So you need to be prepared for when the times are great and when they're not so good. Part of that is just keeping yourself financially educated on what is good during a recession and what is good during an economic boom. So preparing yourself is key, and then having a goal that you stick to no matter what happens in our economy is also super important. You don't want to have to change up your goals every single year or every single month because we have problems in our economy. Fact of the matter is we're always going to have problems. So your goals need to kind of supersede all of that, right? You invest or you save no matter what is happening, and that will make you more successful pretty much any other financial plan. You just have to pick something that works for you and the amount of income that you have right now, and all of that is going to come down to a budget. What's more important is that you continue to invest no matter what. You can't pause your investing because we're going through inflation or we're having really bad economic times. Like I said before, I totally understand wanting to do this right now because millennials have a lot of other things that they need to pay for, and right now is going to be the most important thing because it's right in front of you. You can see these things happening and you don't really know what's coming in the future, and millennials have had a really bad time trying to prepare for the future, whether it's going to school or just trying to get a job based on the economy as we know it. But being prepared is a whole lot better than being unprepared, and it really just depends on how much risk you are willing going to take on. I mean, investing has its own risks. You are never guaranteed to make money, but spending all of your money today also has risks. So you really just have to ask yourself, what is the most important thing to you right now? And the final word of advice that I have is not necessarily financial, but it's something that you can personally do right now, whether it's in your career or your own life. We are going to have a lot of these economic downturns in the future. I can almost guarantee it. And even though inflation might disappear over the next year or two, eventually it's going to rear its ugly head. So the only thing that you can do is to continue to provide value. You want to try to gather skills and knowledge and education that are always going to be valuable, and it won't really matter what's happening with the economy. It'll mean that you always have a stable job. It'll mean that you always have stable income so you can continue to invest and do what's best for your family. So you're going to want to focus on valuable skills that are always in demand and that are going to continue to be in demand for the future. Doing this alone will be the biggest protection that you have against an economic downturn or inflation in the future. I obviously can't predict the future, but things have been pretty rough in our economy for a while now, and they're probably going to continue to be rough for millennials in the future. The fact of the matter is that it's going to be very difficult for millennials to build wealth, but it is comforting to know that it is definitely not impossible. The actions that millennials take today are going to be very important for their financial success of the future. I have no idea what is coming next for millennials, but what I do know is that we need to be financially prepared for whatever outcome actually happens in the future. And it's going to start with us taking responsibility and then taking actions for our finances today, which will hopefully lead us to a better future tomorrow. But that is it for today's business and financial news breakdown. Thank you so much for watching. If you want to stay up to date with all the top business and financial news from around the country, our team puts together a free daily newsletter, and you can subscribe to it by clicking the link in this corner right here. And if you want to stay up to date with me and everything else happening in the business and financial world, I'm putting out updates 7 days a week over here on this channel, and I've actually got another one ready for you right here, so be sure to check that out before you go. That is it for me, everybody. Be kind out there, and I'll see you all in the next one.